Finally, the year is almost over. I mean, it's probably not as bad as last year, but we still have had long periods of lockdown, a record high inflation rate, amongst many other things. But regardless, let's take a look back to see how the New Zealand market has done this particular year of 2021. January of 2021 started off pretty well for the first few days, with the market reaching an all-time high, and it seems like that the trend from 2020 will continue on. But no, the market started declining in February and March, and then it bounced around a bit for the next couple of months, and then recovered slightly more in September of 2021. But it never reached the all-time high levels again. Overall, the New Zealand market is down slightly over the entire year of 2021 by around 2% or so. As a comparison, if we overlay the US S&P 500 over the New Zealand market, we can see a big difference between the two. Now, for the year of 2021, the US market is up by more than 20%. While the New Zealand market did pretty much nothing over the same period of time. Traditionally, the New Zealand market tends to follow the US market, but it hasn't really been the case this year. However, we can still take a look at the top 10 performing stocks in New Zealand for this year. Now, as a quick disclaimer, I have not included any companies that are less than 50 million in terms of market cap. Now, since stocks in these companies tend to be less liquid and generally harder to trade. Starting off at number 10, we have ARBORGEN. ARBORGEN is a company that supplies seedlings with advanced genetics for the forestry sector. Now, even though their stocks are up by around 50% this entire year, well, technology companies often suffer from the same problem, that they are heavily affected by new technology breakthrough and also regulations. Now, definitely more of a high risk and high reward company that I would personally stay away from. If we look at the financials for the company, they haven't had a massive increase in the terms of revenue, where in fact their revenue is slightly down in the year of 2020 financial year compared to the year before. At number 9, we have a New Zealand refinery with the symbol NZR. So for NZR, they are up by almost around 60% over the entire year of 2021. Now, the New Zealand refinery engages in the distribution of petroleum products. Now, even though the share price is up by almost 60% for the year, if we look at the financials for the company, they have actually had a huge decrease in income for the financial year of 2020. Personally, I would also be staying away from this particular company because they have a massive decrease in their net income and also a decrease in their total revenue. Okay, in at number 8, we have Sky TV with the symbol SKY. So honestly, I never expected to see Sky TV on this particular list. Now, over the past few years, they have not really been doing that well in terms of their revenue and income. So if we look at their financials, their revenue has been steadily decreasing over the past couple of years. Pretty much all of the gains in their share price were from the past 2 weeks. One of the main reasons for the gains was because they had a massive profits upgrade, which sees their shares jump up by more than 17%. Overall, I still don't have a ton of faith in the company. Just think about how many TV subscription services there are out there, including Netflix, HBO, Hulu, Disney+, Neon, etc., etc. Now, Sky TV is in quite a saturated market with some huge competitors, and I just don't see them growing that much in the future. At number 7, we have Michael Hill Jewelers. Now, Michael Hill Jewelers are one of the most well-known jewelry brands in New Zealand. They have had a significant growth in terms of net income, growing from a profit margin of around 0.6% in the financial year of 2020 to around 8% in the year of 2021. They also have a healthy dividend of around 4%. They have seen significant growth in terms of their share price since the pandemic lows of last year. However, I would not expect them to sustain this level of growth. Now, with that being said, they could still be good as a dividend income stock with around 4% dividend. At number 6, we have Steel and Tube Holdings with symbol STU. So Steel and Tube Holdings are a company that I'm not particularly familiar with, but they're a company that manufactures and distributes steel products. Now, looking at their balance sheet, their revenue has been pretty consistent over the past couple of years. Now, it's also not a company that I would really expect a ton of growth. However, they do have a relatively healthy dividend of around 3%, which means they could be a part of a dividend portfolio. At number 5, we have SKELLERUP with the symbol SKL. Now, SKELLERUP, from the beginning of the year 2021, its share price has been up by around 67%. So SKELLERUP manufactures dairy, rubberware, and related agricultural products. Now, they have always been one of my personal favorite companies. Even though I do like the company, I am still surprised by their price growth over the past year. So they have seen almost very consistent price growth for the 2 years since their pandemic lows from last year. They have had quite a strong balance sheet with their revenue increasing year over year. Now, personally, I am a big fan of this particular company. And number 4, we have Livestock Improvement Corporation. So their shares have increased by around about 70% over the year of 2021. Livestock Improvement Corporation is involved in development, production, and marketing of artificial breeding, genetics, farm solution, and herd testing services. Now, even though their share price has increased significantly this year, their shares have a very low trading volume, now, which means that you might struggle to find buyers or sellers for their shares. Again, personally, I tend to avoid companies that have shares that have fairly low liquidity and not traded that much. At number 3, we have NZME with the symbol NZM. So NZME is the New Zealand media and entertainment company that includes brands such as the New Zealand Herald, the News Talk ZB, ZM, and other radio stations, and also Radio Hierarchy. They have had a massive restructuring over the past 2 years, including up to 200 job cuts due to the declining advertising revenue. They had a share price increase of almost 100% for the calendar year of 2021. This just goes to show that traditional media is not dead. Now, however, it is quite hard to predict the future for the traditional media with so many competing services such as different social media platforms such as Facebook, Instagram, YouTube, TikTok, and then we have Spotify and their various podcast platforms. Personally, I will be giving it a rating of too hard to tell. And number 2, we have Wellington Drive Technology. Now, Wellington Drive Technology is a company that manufactures and sells electric motors and related software. Now, their share price have seen a dramatic increase since the beginning of the year, and they are up by around 130% for the year of 2021. Now, in the beginning of 2021, I owned some Wellington Drive Technology stock because they would have some good potential. But I sold them in around May at just a break-even price. Since then, their share price has increased by around 100% from all the increased orders. Now, electric motors could have significant application in the future, so long as the demand remains high and they keep on increasing the number of orders and have continuously bringing new technology. But overall, I believe they do have a bright future ahead. One of the downside is that they are still not a profitable company just yet. So just keep that in mind if you are wanting to invest in the company. At number 1, with the highest growth in terms of share price for the year of more than 200%, we have RAKON Technology. Now, RAKON Technology with the symbol RAK is at first place with more than 200% gain in its share price. Now, RAKON is a company that manufactures frequency controllers for telecommunication products. Now, 5G communication is becoming more and more widespread in the future, and RAKON is a company that stands to benefit a lot from that. Now, they sell many different types of frequency controllers that are used in those particular systems. In terms of financials, they have an increasing revenue and income, although it's probably unlikely that they will experience a similar 200% growth for the next year, but they could be a very solid option for holding for the long term. In conclusion, what can we learn from the top 10 performing stocks of this year? Now, one of the main things that we need to hammer in again and again is that past results do not indicate future success. Now, out of the top 10 stocks for this year, only one company is also in the top 10 from the previous year, and that is SKELLERUP, which is not exactly what you would normally consider as a growth company. Now, the moral is that picking winning company is hard. Picking consistent winning companies is even harder. And that's about it for the top 10 stocks for this year of 2021, and I'll see you guys all next time.